What's really good, fam? Been a minute since we've done one of these, so let's get to it, shall we? You're watching Secular, and this is what we're watching at the start of March 2022, and today we're looking at recent changes in the construction sector. Now before we continue, we'd just like to remind you that this channel is meant for general education purposes only and isn't meant to replace the legal or financial advice of a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. So for that reason, nothing we say here should be taken as a basis for investment, and you'll have to do your own work and thinking before deciding whether or not taking up a position on any stock mentioned here is in your best interest. Want to know how? Well, if you just scroll down a tiny bit and hit the like and subscribe buttons, we'll do our best to help you figure out how to figure out this game for yourself. And with that being said, let's get to it. Alright, so the stock I want to talk about is Daewoo Engineering and Construction, who very recently became majority owned and managed by their previously much smaller rival, Junghoon Group. Now, if you've done any apartment shopping over the past decade, you'll likely recognize the two companies' flagship apartment franchises, Junghoon's Junghoon S-Class and Daewoo EC's Prugio. Now, upon the merger, Junghoon has stated that both divisions would operate separately, as would the staff and executives of both firms. But over the past few days, there has been a significant reshuffle of leadership, with the dismissal of a number of Daewoo's OG executive team members and the appointment of two of Junghoon Chairman Jung's grandchildren and a presumed future appointment of his son-in-law. Personally, this was a reason why I divested from the company after buying low in January, but it's unclear how significant the shuffle will affect the future profitability of the company. I just don't know much about them, I don't know anything about their history, so for that reason, I was out. But in any case, through this acquisition, Junghoon jumps up to the third largest construction company in the nation, following only Samsung EC and Hyundai EC, which is not to be mistaken for Hyundai Engineering, who recently postponed their IPO at the beginning of last month, or HDC Hyundai Development Company, whose stock price plummeted after multiple safety disasters at their Gwangju sites. Now for Daewoo E&C, this acquisition gives them a boost in liquidity while finally securing new ownership after being on sale for like a decade, I think. The controlling 51% of ownership was bought from the public-run KDB investment, who had bought the firm from Kumo Asiana and had struggled to sell it ever since. Now, the union of the two firms under one house aims to build synergy between Junghoon's bread and butter, which is public and private housing projects, and Daewoo E&C's strong portfolio of industrial development, including but not limited to subways, highways, overseas bridges, harbors, LNG plants, and hydro plants both here and abroad. This will give a major boost to Junghoon's overseas expansion plans, where Daewoo E&C has maintained a strong presence in the global scene over the past back half of the last decade. Now, this is of course a very optimistic outlook on a merger that we had enough confidence to buy a stake in at one point, so go ahead and take that with a grain of salt. If you'd like to look over their IR documents, I'll leave a link in the description box, and don't worry, they do have English presentations as well. Now let's do a quick zoom out and look at the most recent indicators in the construction sector and consider what this may mean for construction companies on the market today. So using data from the KDI, the Korean Development Institute's February indicator report, 2021 appears to have been a strong year for the construction sector, coming off another strong year in 2020. These numbers are based not on construction completion, where there has been a bit of a loss in both civil and building construction over the past 2 years, but based on orders received, which jumped for 2 consecutive years. Additionally, building and housing construction permits saw a massive increase in 2021, and initiated building construction also saw 2 consecutive years of growth. On top of this, the number of unsold houses has also dropped for 2 years in a row, which reflects the demand that we all know about in the red-hot housing market. It really must be noted, however, that initiated projects and orders did seem to peter out as the year went on last year. Now, on a related note, investment in industrial machinery has maintained consistent growth over the past 2 years, with the exception of transport equipment, which saw a dip in 2021, while public machinery orders dipped slightly in 2020 before exploding for 50% growth in investment for 2021. Now, machinery investment can occur due to a number of reasons, such as a desire to upgrade to more technologically innovative or eco-friendly equipment, to make use of any large liquidity inflows like those secured during the late 2020, early 2021 bull run, or to help scale operations. Investment may also have just been to replace old or broken equipment, though a near 30% growth in domestic machinery orders in the span of 1 year suggests to me that construction firms took advantage of the cheap credit and increased liquidity that came with the pandemic and expanded their operations. Now, while this all may appear to be some positive momentum for the construction sector, and while Daewoo stock, I said that weird. While their stock and the sector as a whole has seen some solid gains over the past couple of weeks, all of those numbers are inherently backwards looking. With the prolonged strain to the global supply lines, a precarious geopolitical climate, and an election on the way in a few days, there are a lot of ways that the winds can change in the near future. The increasing cost of construction due to increased material and oil prices, and the potential for a slow in demand for new housing units due to tighter lending regulation, inflation, and a decrease in consumer liquidity are all predictable potential headwinds that the industry may face. However, if the bulls out there are confident that the housing market will continue to grow as new apartments go up, and that infrastructure projects will continue to roll in both domestically and abroad, then getting in on the nation's construction firms at the current price point may be worth some consideration. Like I said, I personally took and sold a position on Daewoo ENC, but I'd bought in during the dips of January and February, so you'll have to go and do your own homework to see if you think that the price recovery in this sector has hit or is nearing its ceiling, or if you still think it's a strong value buy. Alright, that's it for me. I hope this helps. We'll be back soon with another video on some topic or another to do with the economy here in the ROK. Till then, take care of yourselves, keep doing what you've been doing to stay alive, and be easy. Peace.